Good afternoon, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joined with me here this week is Steve. How are you going, Steve?
Good, Ollie. Thank you for the introduction, and hello, everyone. Good afternoon.
Unreal. Too easy, mate. Steve, great to have you on for second week in here. We haven't scared you off just yet. So, to move into the agenda for the video ahead. So, we'll start off on the last week section, where we'll be putting a spotlight on some of the big events from the week prior, analysing how prices reacted as a result as well. And then we'll shift into the this week section, where we'll look at some of the upcoming major events of the week, or at least the ones which we know about so far, and putting our take on where we're speculating the prices to go as a result. We'll then move into the technical corner, where we'll put a spotlight on a couple different markets through technical analysis, look at them from a top-down sort of level, and then using our technical indicators as well. And then we'll then shift into the Q&A section, where we'll be answering some of your guys' most commonly asked questions from the week prior. So moving into last week, wanted to start off by taking a look at some of your guys' most top traded products from the week prior. As you can see, there's not too much change in there from the week before that, and it is very US heavy, obviously given that they are the biggest economy in the world. So moving into the events of last week, the first one which we had obviously was the RBA cash rate. Personally, I was actually a little bit surprised by the RBA cash rate decision to hold rates. But Steve, what do you reckon? What was your take on it?
Yeah, definitely big surprise when it comes to the RBA putting a hold. So to give you perspective, it was a 97% that was factored in when it comes to a rate cut of 25 basis points. But a surprise of move. The big four banks all got it incorrect. So all big four, even UBS, who changed their mind from August to July. But the only one that did actually get right out of the big banks is the Bank of America, which I thought, to be honest, is a bit funny considering it's not one of our local banks. But yeah, a big surprise, a lot of movement, especially within the Aussie, as well as the sort of statement that followed by Bullock was interesting. I guess to deep dive into that, I guess the RBA is really looking at, I guess, the lag effect with the data. So despite the actual percentage being within this sort of range, they're really, and despite the lowest of retail sales as well as building numbers the week before, they're really waiting to see with the June quarterly CPI numbers, so consumer price index numbers, basically instead of waiting for the 12th of August 2025 for the next sort of cut, everyone's going to be really looking at that sort of data, which is released on the 30th of July 2025. And we're looking at really a number of 2.6 forecasts or lower. So if we hit that sort of 2.6 lower forecast or lower, we're most likely going to say that there is definitely going to be a rate cut in August. Obviously, it's no guarantee, but the question will be around how big. So whether it's 25 basis points or 50 basis points, depending on how the economy goes. But yeah, the other things that were playing into effect was around the tariffs. So really the geopolitics playing a factor as well as global uncertainty. But interesting also, the RBA actually mentioned the vote, which was actually 6-3 in favor of keeping on hold. So a big surprise. What were your thoughts, Ollie?
Well, it's an interesting one because I guess Michelle Bullock, she did mention that a 50 basis point cut was discussed at the last meeting when they did cut rates. So it's interesting. Well, I think most people did kind of obviously take that into their stride. Big comments coming from the RBA governor. However, I did see a take from the BetaShares chief economist, Bassanis, sorry if I'm butchering that one, suggesting that most of the economists did jump the gun after the latest inflation figures came out, coupled on the side Michelle Bullock's comments. So again, he did reaffirm what you've just said there, Steve, about the RBA needing to wait for some more reliable data around the quarterly CPI, and I guess we'll just take it from there, see how that plays out, and they might honestly factor in the rate cut at the next decision.
And it was also interesting with your historical trend. I recall last week you mentioned it's been since COVID since they've actually had consecutive rate cuts. Um, so I might just hand it to you to just elaborate on that.
Oh yeah, so pretty much I saw the last time they did cut rates consecutively at RBA meetings was, I believe, around April in 2020, right when COVID was really starting to ramp up. Everyone's going into lockdown. So I mean, I guess if that's a very turmoil time, double rate cuts they're even considering at this time, it shows the state of the economy that we're in.
Yeah,
Steve, did
no,
you want
definitely.
to
And
take? Yeah. Oh, sorry. You
yeah,
want to take on?
I mean, I think yeah, just with that, it's obviously, history kind of repeats itself. But yeah, it looks like the RBA is really looking at a similar sort of approach to the US Fed, which is more like a sit and wait and just really factoring in the lag effect with the actual inflation data. So based off the sort of cut earlier this year, but looking forward with the sort of the actual cuts, we're really looking at probably August, potentially November, and then the earliest for next year, maybe a February cut. So that's what's currently being priced into the market at the moment. Obviously, as things go by, if there's more of a chance or less chance, it'll be priced in. But definitely a surprising result. We then moved across to the RBNZ, which they held. It was more predicted. It was as expected. I think the RBNZ, they're really on top of their sort of decisions, and yeah, they predicted it again. But I might hand it to you, Ollie, just to see what your opinion was quickly on that decision.
Well, I guess the RBNZ, they historically are very good at signaling their intentions around rate moves. So I think on the New Zealand dollar, a lot of it was largely priced in already. We didn't see too much movement on the New Zealand dollar off the back of that announcement. Obviously, as said, it was very well known what they were going to do. So I guess not really too much take on it from my side.
Yeah, and the NZ basically dropped a bit. From what I've read, is that they're predicting one more cut this year, so it'll be interesting to see how they went. Um, the sort of data points that we also saw out of China, so basically the CPI as well as the PPI, so consumer price index as well as the producer price index. So the CPI being stronger than expected, but the PPI being weaker. So the PPI numbers actually the biggest drop in 2 years since July 2023. So that had a mixed reaction to the market, obviously with the Aussie, AUD, USD being really impacted by China as our biggest trading partner. We saw um, basically a bit of a drop to support. And it's kind of probably found that sort of strength because of the RBA strength. So interesting to see with the volatility, but there would have been a lot of people who, a lot of traders that would have been stopped out during those times. But all, obviously, uh, good to see that there was a lot of people also having the sort of appropriate risk management strategies. Um, Other than that, we also saw the UK GDP, which was lower than expected. Did you have any thoughts on that, Ollie?
Well, in terms of the UK GDP coming out, I think it came in lower than expected, but I don't think that's too much out of the surprise to anyone, just given the impact of the tariffs, no?
Yeah, no, definitely. I think what we'll be talking about quite a bit is about the tariffs. I'll quickly go into the US data. So the US unemployment data was better than expected, which basically echoed what we discussed last week. So we discussed that it was better than the 4.3 forecast at 4.1, where you can you could probably kind of predict that the unemployment data would be better than expected, considering the significant sort of jump from where it was actually forecasted. So I don't think, to be honest, I don't think it was too much of a surprise for traders, but there would have been quite a few people that could have been caught out. But looking at the big sort of topic last week and into this week is really around the tariffs. So at the beginning of the week, we saw Japan and Korea having the sort of first letters. And yeah, Trump's basically put tariffs on quite a few countries. As you can see, there's copper, there's pharmaceuticals, there's Brazil, Canada, EU, as well as Mexico. I'll probably kind of deep dive into a couple. So with the Canada, so the Canada tariffs, it was mentioned about 35%. That sort of tariff was announced. There was a lot of volatility in the CAD or Canadian, as you'd expect. But what we saw was a steep sort of reversal. So that declined, but then it's basically back to normal levels. And that's probably off the back of clarification from one of the US administration staff. So essentially, what they said was that the tariffs do not actually apply to the goods under the United States, Mexico, Canada agreement. So it's a USMCA agreement, which is basically the old NAFTA agreement. And this is a free trade agreement which doesn't actually have the tariffs applying. So a lot of the sort of agricultural, automobiles, etc., and those sort of industries are not going to really be impacted by tariffs. So yeah, for all we know, it could be taco or Trump always chickens out, as we've been saying, Ollie. Um, but yeah, I mean, there's that from Mexico. Mexico is also in that sort of same bucket around the USMCA, or United States Mexico Canada agreement. And to give you perspective, that's 83% of US import goods are exempt. So you look at that and obviously there would have been a lot of traders who would have just seen on face value, and not known about these exemptions from the tariffs. While we saw copper a spike, after the announcement of 50%, which would have a very big impact on the US automotive industry. So their top importers into the US are Chile, Canada, Mexico, and South America. So even then, if you remove the top importers, I don't think the US has enough actual copper providers in order to meet the sort of demand. So yeah, that's my sort of take on the tariffs. But yeah, Ollie, did you have anything further to add?
Well, I found it quite interesting the weekend announcement of a 30% tariff on the EU region. So throughout last week, we did see a lot of headlines coming from the EU Commission aiming to reach a trade deal with the States by August 1st. This was also doubled down by comments from the German Chancellor Merz, who is, quote, cautiously optimistic a EU-US trade deal can be reached closer to the 10% tariff sort of range. So for the week that's just started, European indices have started off down somewhat following the announcement. However, me personally, I'm still bullish on the European markets. Last week, we did see the German DAX close at its highest ever price ever, before dropping off to finish the week. So, depending on whether or not a deal can be made closer towards that 10% range over the course of the week or next week, I'd like to see it retest the previous highs on there. Okay, and I think that probably takes us for the tariff updates for last week. We're moving
Yeah.
into the week ahead, where we'll have a look on some of the week of the events coming up. Steve, did you want to take it away for this week?
Yeah, and just touching on, I guess, news that really impacted also last week as well as this week, which will be kind of front of mind. There is reports coming out of the US that Jerome Powell, which is the current chair of the US Fed, might be resigning. So there was talks by Christopher Waller, which is one of the Fed members. He's actually he's actually in line for the next chair once Jerome Powell actually finishes his term, which is scheduled to be 2026. But if, for example, Jerome Powell does actually resign, I don't think the market's going to take to. I think there's going to be a lot of volatility based on what happened in April. There were speculations that Trump was going to fire Powell back in April, and we saw basically a sell-off in equities. So there could be that sort of similar reaction. It's still there's rumors. I'm not sure whether it's completely confirmed yet, but there is a good chance. So we'll see how that develops. While with for this week, we do have a lot of data points. So really, just to look at the strength of each of the economies. So from whether it's more the CPI. So CPI is basically the consumer price index. And essentially what that does is that presents the percentage change in prices that consumers pay for goods and services without excluding food and energy, which are very volatile. So that's a key indication to see how the economy is going and a measure of inflation. The other one that we're going to be looking at is also a lot of the PPI, which is the producer price index, which is a measure that shows the average change in prices of domestic producers receiving for their output. So that, along with the sort of GDP, as well as retail sales and unemployment, but also a big one is the Japanese upper house election, which I'll hand over to you about that.
Well, I won't spend too much time on the Japanese upper house election, just in the interest of time on the call just here. So, for anyone who does want to join me in a discussion around the Japanese election coming up on the weekend, please refer into the VIP chat room. I'll be posting in there this afternoon after the live stream has finished. And I guess I'll put a little bit of color on the election coming up and what we are forecasting for it. Thank you, Steve. So I guess we'll move into the technical corner for the week. Let me just share my screen with everyone. Alrighty, so it looks like we've got it coming up in here. So I wanted to start off looking at Bitcoin on the weekly chart. So as we had touched on, I think Bitcoin is, I guess, the trending market at the moment. It's all very well publicized that it is in a very bullish run. And as of earlier today, we did break above 120K for the first time. Obviously, that was being a big price point for a lot of traders now. So we're looking for opportunities to potentially carry on this bullish momentum. Looking on the MACD line as well as the RSI line, and both of them are indicating bullish momentum for this market. I want to move into the daily as well, just get a little bit of an idea of where we're sitting for traders at the moment. You can see we've got all of our moving averages angling up, as well as on the Bollinger Bands, we've had a number of daily close above the upper band for the Bollinger Band, which is a real strong signal of the bullish momentum. However, what I wanted to highlight to everyone is the RSI line is currently sitting above the 70 level, which has put it into the overbought area. So historically, when we do see a bit of an overbuy on the RSI, it is followed by a bit of a downturn in price. So this is what I'm going to be looking for now. As a buyer into the Bitcoin market, I want to be buying dips. So I'm going to be looking for the price to drop down a little bit further back into the range for RSI. I've highlighted two key support points where I think support could be found. One of them, the first one around the 117K mark. If it breaks through this price, however, I think we could also find a support maybe around the 111 sort of range, or 112 sort of range, sorry, before bouncing up. And that's where I'll be looking in for an entry into this bullish market. So the next market I did want to touch on was the Aussie against Japanese. Obviously, two of the markets which we did speak about in the last week's section just now. So starting off looking at the Aussie against the yen on the weekly, I'm looking at an upwards trending market starting from the second week of April, my bad. This is also supported by our MACD line, which is currently sitting above the signal, as well as the RSI line above its respective single. You can also see we did have the 50-day moving average come down, drop below its 100-day, and that they are somewhat sitting together. So I'm expecting to see the 50 overtake the 100-day. If we move this into a daily chart, get a bit of a better idea of where we are sitting as it stands right now. Similar story to the Bitcoin market. So you can see we had a number of daily close above the above the upper band for the Aussie against the Japanese yen. So, which is telling me that there is bullish momentum very much in play for this market. So I'm going to be looking for an opportunity to buy. If we move this into the 4-hourly chart now, get a little bit of a picture for where we're sitting. So I can see that the MACD and the RSI lines aren't really giving too much of a clue about where we're sitting, but I am seeing the RSI has dropped below its signal, which is telling me that there is a little bit of bearish momentum for where we're sitting now on the 4-hourly. We can see to start the week, it has traded within the Bollinger Bands. It is still sitting in the upper band, but it is obviously kind of flatlining somewhat, I guess, trying to find a consolidation or a key support price before it carries on the upward trajectory. So for where we're sitting now, I'm looking for signals to reaffirm the bullish momentum. So I'll be looking for it potentially to consolidate or down track towards its simple moving average before turning up, where I'll be looking for an entry to buy in there. So I think that covers us for the technicals for this one just here.
Just with
Sorry, you go ahead, Steve.
Just with that, Ollie, just looking at the Bitcoin technicals, very interesting to see. Obviously, the sort of price structure at the moment. Coming back to what also happened last week and what's happening at the moment is a lot of flows are coming in from institutional investors. So a lot of the ETFs are coming in with the sort of Bitcoin flows. That's because of the sort of crypto legislation in the US. While even last week, the RBA also announced a particular project that they're looking, so Project Acacia. And essentially what that's going to do is that's going to be looking at a similar sort of crypto coin, so stable coin based off the Australian dollar, so AUD. Similar to the US dollar where they've got USDT or Tether or USDC, which is USD coin. So similar, pegged off the US dollar and based off that sort of movement. So I guess what I'm saying is that there's really interesting time within the crypto space, but as legislation kind of relaxes, this is probably why we're seeing quite a significant movement in the crypto space.
Awesome. Thank you very much for the insight on that one, Steve. So just to finish it off, we'll move into the Q&A section where we'll answer some of the most commonly asked questions from you guys from the week prior. Steve, did you want to take it away with question one?
Yeah. So with question one, why do news announcements impact price? This is a good one considering that last week we had the RBA announcement as well as the US employment data. So a lot of the sort of traders already factor in the actual price movement based on the announcement. So a lot of traders would have thought there would be a rate cut, and therefore they would have not anticipated that was actually going to be on hold. So there would have been a lot of accumulation throughout the day. There would have been up and down with the volatility, and there could be a lot of people who basically ready to short the AED or Aussie as soon as the announcement comes out, as well as the statement from the RBA, depending on whether the statement was classified as dovish or hawkish. So dovish means that there's poor sentiment. Otherwise, hawkish is when it's still kind of upbeat in regards to like global uncertainty and so forth. So because it was actually against what was expected, that's why we saw a steep rise with the AED, and therefore that's what's happened with the news announcements and the impact on the actual price. Similar to the US, for example, when it comes to the employment numbers, there would have been a lot of traders that could have used last week's news around the 4.1 unemployment rate to kind of predict the employment numbers So that could have had an impact, and people could have benefited on that particular announcement. But during those sort of times, always ensure that you've got the appropriate risk management strategies in place. And Ollie, question 2.
Thank you, Steve. So for question 2, obviously, given that Bitcoin is one of the big trending markets at the moment, a lot of people are seeing a lot of headlines around it. I wanted to focus a bit more on one of our crypto offerings. So what is our perpetual account offering and how could it benefit me? So for anyone who doesn't know, our perpetual account type is an account designed for medium to long-term crypto traders, which offers a flexible and cost-effective way to trade crypto CFDs. Our perpetual account type replicates crypto exchange account structure, making it much more price competitive with low spreads and competitive commission rates. For the cost of trading for our perpetual accounts is among the cheapest for crypto CFD providers, with spreads starting from 0.1 pips and competitive funding rates comparable to any major crypto provider. For anyone who is interested in learning more about the perpetual account types, please refer to myself or Steve, or feel free to post any questions in our VIP chat room. So that brings us to the end of the video today. A recording of this video will be posted up on our YouTube channel after the live stream has done. As well, a recording will be posted in our VIP chat room. If anyone has yet to visit the VIP chat room, I would highly recommend it. Steve and I are in there all day, every day, posting a lot of articles and any big major events happening in the world. As well as also manned by a number of analysts from the Everest Fortune Group. So for any question you have, please feel free to reach out to us in there. But I think that brings us to the end of the video. Thank you very much, Steve, and hope you have a good one, everyone.
Thank you, everyone. Enjoy your day.
Cheers.